Talk about the tale of two cities. It was the best of times. It was the worst of times. It was the age of wisdom. It was the age of foolishness. It was the epoch of belief. It was the epoch of incredulity, as Charles Dickens wrote. This week, we learned that 6.6 million more people filed for unemployment. That makes the 3-week tally more than 16 million, and taking the jobless rate up to 10% or more. But the best part, at least for some, was that stocks had their best week in over 40 years. Pundits will tell you markets haven't fully grasped the scope of the devastation the coronavirus will wreak on the economy, let alone the human toll. But perhaps the unprecedented actions by the Federal Reserve and other central banks are keeping investors numb. But most strategists think stocks are likely to take a leg lower from here. An analysis published Thursday, investor Ned Davis notes that the stock market does better than average when unemployment spikes. Davis's research shows that a jobless rate over 6% correlates with the stock market rising 13.7% per annum. But how can that be? Is it that markets look ahead and have priced it in? Or is it that the central banks have put out the punch bowl? The Fed is likely trying to keep the 40% of Americans that own stocks happy. But what about the 60% who don't own stocks? And what about that newest and hottest leading economic indicator, toilet paper returns to Costco? Stick that in your algo and see what comes out. It gives new meaning to financial wipeout. Well, on that note, let's take a look at our charts. We're going to look at two charts beginning here with the 1-year daily on the spiders, the SPY, and the close on the Thursday, the shortened week, was 278.20. So looking back here, the top at that point, a very sharp bottom here, and then the rebound. So we came all the way down here and back up there. That looks like a V recovery to me, at least so far. Now, if you watched the video yesterday, one opinion is that we're going to retest or perhaps go lower than that bottom here. The other theory is that we're done with that correction and we're on our way. So at least by what I see in the charts so far, I think we're probably done with the low here. But I think we may come back down at least to do a little bit of a correction and backfill. So let's move here to the MAC and see what I'm talking about. Again, that sharp rebound here, we're heading on up with the fast line accelerating and the slow line moving on up. Very fast rebound heading to that zero line very quickly. You can see that here also in the histogram. Nice bottom and nice run up. Now, into the price rate of change, you can see that we probably went a bit too far on the downside. Now, are we going to go a bit too far on the upside? Well, I think so, but we're still not done with the upside, at least by what this shows here. Moving on down here into the relative strength, that is still strengthening, continuing to improve here, which is good. That's a nice formation. Into here, the stochastic, same thing. Nice bottom and nice move on up. We're into the overbought territory, but we can hang up here for a little while. Hopefully we will for, say, another week, maybe two. I'm not so sure about that, but we'll see. Moving here into volume, I like the movement and the pattern that the volume has created, spiking on up and then calming back down again. Here into the Williams, nice basing and bottoming there. The move on up into this overbought territory. And I hope we do some sawtoothing up here for, again, another week, hopefully two. We'll see. But the problem with the daily is it does look good, but the power hasn't shifted over to the weekly yet. So we're not all clear. One last look at the chart. Let's go take a look at the weekly. Now, before we talk about the weekly chart, I just want to talk a little bit about the VIX, or the fear factor, and we've mentioned it a number of times. Just this week, the VIX came back under the level of 50. Now, that's still relatively high, And also, the problem with that is that it seems to be consolidating and potentially will make another move higher again. And if that happens, then we will take another leg lower in the stock market. But I don't think we're going to go all the way down to retest or go further than that low here. I think we'll just get perhaps another little bit of a correction with some back and filling, as I call it. But that to me, looking at the VIX, is the highest probability. So the daily is showing that we're heading on up. So we want to watch the daily to see if we start to top out and then maybe a leg lower. So keep your eyes open for that. Now, looking here, this is a 2-year weekly on the spiders. And the important thing I want to talk to you about here is the MAC. And you've heard me talk about this time and time again too. The distance between the slow line there and the fast line here is pretty wide. And that leaves a lot of room for volatility. So that's the second reason I expect perhaps a little bit of a correction and some backfilling. I don't think we're going to have another crash, but I think we are going to have some volatility. Here into the histogram, you can see that we're still pretty low. We're still at a measure of negative 7.69. So there's a lot of room here. We have a lot of repairing to do before we get back to that zero line. And when the market is repairing, that leaves room for shenanigans like volatility. Price rate of change looks really good. Relative strength is still a moderate 45.77, needs to improve, but it's on its way. Here, stochastics have bottomed, based, with the fast line just popping through the slow line there. Volume looks fine. And then the Williams. I'd like to see the Williams run up to that overbought territory. Hopefully it will do that here relatively soon. Back up here to the price chart. And once again, you can see here we had a very sharp bounce V recovery, but I think we've got some time before the MAC closes. I think we have some time for some volatility that may occur. So just be prepared. And so for today, that's ChewDog Charts. Thank you.